glad to have you all here today. My name is Hunter Smith. I'm excited to present to you today Mr. Sagar Nandi, who will be speaking a little bit about shorter term and longer term investments and aligning them with the market. The disclaimer has been on the screen here, basically stating that we're not giving you any specific trading advice. So when Mr. Nandi is using any specific trading examples, it doesn't mean you go out there and trade it. Again, these strategies should be used by investors who understand the risks that are involved. Since we're running a little bit late here, I want to talk a little bit about Sagar, who owns Superior Profit, and he's a wonderful educator, and we've been doing business with him for a couple of years now. And one of the things that Sagar really brings to the table is his extensive knowledge in the financial markets, but also the ability to work directly with his students. His website, which we'll go over here at the end of the presentation, superiorprofit.co. You should definitely go to this website and check out all the free training materials. We'll give you some resources towards the end of the presentation here that you can check out. Wonderful support is always supplied by Sagar and his organization. Without further ado, though, I definitely want to get Sagar and jump straight into the presentation here. Sagar, can you hear me okay?
Yes, I can hear you. Thanks to Hunter for the introduction, and thanks to all of you for making time to join me today for the presentation Aligning Trades with Market Direction. I am Sagar Nandi, Chief Analyst and Trader at Superior Profit, a company based in Singapore. I will not take time to introduce myself anymore. If you are interested to know more about me, the company Superior Profit, or more importantly, how it can help you in your trading, you may visit the website www.superiorprofit.co and click on the About menu. Before we begin, let's go through the standard disclaimer. This demonstration is for educational purposes only. It is designed to share information on Superior Profit's trading system. The information presented here should only be used by people who are aware of the risk inherent in trading. Past performance is no guarantee of future return. Superior Profit is not an investment advisor. This session is not for any recommendation of buying or selling stock or any other instrument. Superior Profit will have no liability for any investment decision made by its audience. In today's topics, we will first see whether aligning your trades with the market is indeed required, and then look at the market's pyramid structure consisting of multiple levels: broad market at the top, and then sector, industry, and stocks. For the stock level, traders may analyze a stock and make buy-sell decisions based on both fundamentals as well as technicals. We will see how you can align forces from each of these levels with your trade direction using queue systems. The entire process may be carried out in top-down or bottom-up workflow, and we will briefly illustrate that. We will then summarize the discussions and have a Q&A session. Let's look at the nature of the market and see why aligning forces with your trade's direction is essential. Market has a constant battle between bulls and bears. That is, between market participants like you and me. Some are bigger players like mutual funds, hedge funds, etc., and some are smaller players like retail traders. No one knows how and when the participants will enter and interact with the market, and therefore there is no certainty about which direction the market or a particular stock will go. What a trader can do to increase his probability of success is to align as many forces as he can in the trade's favor. Once he does that, the mathematical or statistical edge will work in his favor. A particular trade's outcome may be uncertain. However, over a large number of trades, the trades will generate profit so long as the trader also manages his risk. In this session, we will address the matter of how to align more and more edges in favor of a trade. To do that, let us look at the market structure. Market is structured in multiple levels in a pyramid structure, and your goal is to align edge in your favor based on objective data from all of these levels. At the top is the overall or broad market. This represents the whole market, like the USA market, for example, or it could be the stock market of any other country. Below broad market is the sector level. All the stocks are classified into 11 economic sectors. Stocks are further classified into industries. Q-Edge has established 250 industries, and you can easily assess the performance of these industries in a visual manner. At the lowest level of the pyramid are the individual stocks. Every level moves slower than the level below that. Stocks move fastest and the broad market moves slowest. For studying a slower level like the broad market, a longer time interval like the weekly interval, for example, is more appropriate for removing noise and identifying the true trend. If any level moves upward, it tends to bring the lower levels with it. So if a market moves up, it is more likely that stocks will go up than down. Same is true for sector and industry. If you have a way to align your trade with market, sector, as well as industry direction, then you have aligned maximum forces behind your trade. On top of that, a stock may move based on its chart's technicals as well as based on fundamentals. This is so because market participants look at both of these to enter and interact with the market and make buy-sell decisions. Some of the participants may look at only fundamentals, some may look at technicals only, and yet others may look at both. Therefore, if you can align your trade with both stocks fundamentals as well as technicals, you have even more edges in your trade's favor. In fact, with all these alignments, you will have the maximum edges in favor of your trade. Still, most traders shy away from this approach for two reasons. One is it requires some amount of patience. However, that can be worked on. The second and main reason they don't use this approach is because so far there was no easy way for retail traders to assess all these levels in an objective, simple, and time-efficient manner. With Q System Suite, Q Broad Market Commentary, Q Global Technical Charts, Q Edge Sector Industry Analyst, and Q Vital Fundamental Analyst, you are now able to easily and time efficiently align forces across all these levels favoring your trade. Let us see how you can do this. We will start with the broad market level. How may we study the broad market's direction? This is best achieved by combining multiple aspects of broad market. One is to study the broad market indices or ETFs. I was running MetaStock Explorer that just completed. Let me continue. One is to study the broad market indices or ETFs, say SPY, QQQ, DIA, and IWM for the USA market. Second is to study the composite indices, NASDAQ Composite and NYSE Composite, for example. And third and last one is to look under the hood by studying the market internals. When we combine these three aspects, we come to one of three possible conclusions about the broad market. It may be bullish, bearish, or neutral. How do we use it in our trades? In general, for swing trading, if broad market is bullish, we may take only buy positions. If bearish, we may take only short positions. If neutral, we may stand aside. What about long-term investment? Here, optimal point to buy the stocks is the beginning of a bull market which comes after a bear market. This needs patience as bull markets and bear markets don't happen daily, monthly, or even yearly. However, waiting for such optimal points pays handsomely for anyone who has the patience. Later, we will see that many but not all industries move in sync with the broad market. And using Q-Edge industry analysis, we may find long-term investments at different stages of a bull or bear market. How do we know the current broad market status? You may use Q broad market commentary published regularly on Superior Profit website to know the broad market direction. Let me show that to you. If we go to the Superior Profit website, the home menu, and click on broad market, then we will see the charts of NASDAQ Composite Index on the left hand side and NYSE Composite Index on the right hand side, along with three pairs of internals. The top pair is new high low, that is the total number of stocks making new highs minus the stocks making new lows. The middle study is advanced decline, that is the total number of stocks advancing minus the total number of stocks declining. And up down volume, that is the total volume of all stocks going up minus total volume of all stocks going down. This is the lower study. We can combine the index study along with the three pairs of internals to have an understanding of the overall market, and it is published every week at the weekend on this page. At the top is the summary state of the market. As we can see, as of 26th August 2017, our market analysis was that the indices are bullish, internals are weak, internals for that specific week was bullish. Finally, we make money only if the market goes up for stock long positions. So in the end, the state of the market as indicated by the indices strength represents the broad market direction. So currently it is bullish. Because the broad market is bullish, we will do better if we can take only long positions, both for swing trading as well as for long-term investment. By doing that, we'll be aligning our trades in the direction of the broad market. What about the sector industry level? What causes sector and industry-wide moves? Technology change, supply and demand factors, economic and monetary policy decisions influence sector and industry growth. And these influences may bring an industry in or out of favor. If we can trade with the industry's strength with buy positions or weakness with short positions, we are aligning our trades with the market. We may observe the strength weakness of sector and industry as well as change of that strength and weakness using Q-Edge sector industry ranking heatmap table. For swing trades, which may typically close within 1 week, you may take only long position if the current industry state is bullish, shown by cyan color in the 5-day period heat map. And you may take only short position if current industry state is bearish, shown by magenta color in 5-day period heat map. As you can see, for the broad market, we used fixed weekly interval for analyzing the market direction because broad market was the slowest level at the top of the pyramid. Sector industry is in the middle level. Here we are using 5-day moving period to analyze the current direction of the sector and industry. For longer term investing, you may look for industries that were weak for multiple review periods, shown in Q-Edge in magenta color, and then turning bullish, shown in cyan color. And the opposite is true for long-term short positions, should you prefer to take such trades. Q-Edge sector analyst analyzes 11 sectors, and Q-Edge industry analyst goes much deeper, analyzing 250 industries. For benefit of time, I will use only Q-Edge industry analyst. Let us have a look at live Q-Edge industry analyst to illustrate its use. This is Q-Edge industry analyst. Every time we open this Excel based tool, where the underlying engine is based on MetaStock Zenith, it fetches data about 250 industries and does a lot of calculation. We can click the sector industry button to copy the data into industry work area and do our slicing, dicing, filtering, sorting, etc. on that tab. What Q-Edge does is retrieves the data of the 250 industries, analyzes them across 12 monthly periods, M1 to M12, and then more frequently for recent periods over 10 days, 5 days, 2 days, and even 1 day. It then assigns a rank to all the industries. The stronger industries are assigned rank 1, 2, 3, etc. and the weaker industries are assigned rank 255, 254 onwards. As you can see, it also assigns a heat map to the ranking table. Cyan color is assigned to the strongest industry. magenta color to the weakest industry and a color gradient to all the industries in between. The result is a heat map and ranking table. Let me sort it over 5 days period. This heat map and ranking table in an instance tells us which industries are strong right now. Remember, for industry analysis, we are using primarily this moving 5 days window. So I am sorting by the 5-day period, and the strongest industries are coming with the smallest ranks, 1, 2, 3, etc. So we can see that currently these industries are the strongest. So if we are looking for swing trades, then we will be taking only trades in these industries and only in the long direction. By doing that, we will be aligning our trades with broad market, that is bullish, and with the industry strength as well, because these industries are strong right now. What about for long-term investment? For that, we may look for an industry like construction and engineering, which was weak in past periods as shown by the magenta color. You could look at the rank number, but just looking at the color coding is sufficient. We can clearly see that for construction and engineering, it was weak for many monthly periods. Over 10 days, its rank improved heavily. We can also see the color change from magenta to cyan, and over 5 days, it improved further. For further fine-tuning, you may see that over 2 days and 1 day period, the cyan color is maintaining. So construction and engineering industry was weak for a long time, lagging other industries, and now it is gaining strength, outperforming other industries. So if we are able to find a stock in this industry that has a buy signal, then it may act as a swing long trade opportunity as well as a long-term investment buy position. This is how you can use Q-Edge Industry Analyst to align industry strength in your trade's favor. If the market was bearish, then we could sort it from largest to smallest across 5-day period and look for short trades only in these industries, which are weak as shown by the magenta color over the 5-day window. And if we were looking for long-term short opportunity, then independent power, energy and energy traders would be a candidate industry which was strong for many monthly review periods shown by cyan color and recently turning magenta, that is now turning weak or underperforming other industries. However, right now the market is bullish, so following the spirit of aligning forces from each levels to our trade's favor, we are going to only look for long opportunity, and for that we are going to look for stocks in these industries. What about stocks fundamentals? We have already covered the broad market level and the sector industry level. Next level is stock, and at the stock level we can look at stocks fundamentals as well as technicals. Stocks fundamental study can be complex as there are many dimensions to look at across multiple time periods and then compare data between peer stocks. After talking to many financial experts, including CFOs, investors, and successful traders who use fundamentals, Superior Profit has created Q Vital Fundamental Analyst that presents only the necessary parameters in visual unambiguous, and easy to use manner. To begin with, we may state that a stock's fundamental values in isolation does not mean much. It must be compared with similar stocks to correctly assess strength and weakness. In QVital, you can do this comparison across industry as well as across a peer group that can be created automatically based on stocks, industry, sector, or country, or you may even create a manual stock list and use that for peer comparison. One example could be a list of all the stocks belonging to S&P 500. You could get that data in QVital and then do the peer comparison across the 500 stocks. QVital analyzes different categories of fundamental information: valuation parameters, growth parameters, and solvency parameters. It also looks at earnings, dividend, etc. It does relevant analysis across short, medium, as well as long term. QVital finally presents the data in a visual and unambiguous manner that you can interpret easily using color codes, similar to how the industry analyst is used, using only color codes. Fundamentals that are strong are colored in green or blue, and weak fundamentals are colored in red or magenta. Simply by looking at the colors, you can decide if a stock is strong or weak relative to peers. QVital may be used in many different ways. There is not enough time in this webinar to go through all aspects of QVital. You may visit our video page in Education Center and watch the presentation on QVital to see how you may use it to your advantage. Let me point you to the video page. If you go to the website, Education and Video menu, then you will see a number of videos are listed there and QVital is there at the top. Let's go back to the presentation. Regarding fundamentals of a stock, it is common that a stock has either strong growth or optimal valuation. Finding a stock that has high growth and low valuation is not common. Therefore, it would probably be enough to have either strong growth or optimal valuation to declare that a stock has strong fundamentals. And therefore, it would be a long candidate for swing trading as well as long-term investing. Conversely, a stock with low growth or overvaluation would be a candidate for short, for swing trading or long-term shorting. Additionally, for long-term investing, we would like the stock to be at pendulum high for short or pendulum low for long. Pendulum high and low are very high or low values on the Q technical charts that are plotted automatically using a template. You can also use Q Sonar, that is the search program of Q Global Technical Analysis tool, to search for stocks that are pendulum high and low, and then use the result list to look for short and long opportunities respectively. For example, right now we saw that the market is bullish, so we might run Q Sonar to find all the liquid stocks that are at pendulum low, that is at very low price, and then look for optimum valuation or high growth stocks from that list, and that would be a long-term investment opportunity. Let us look at QVital Life System. We'll take one USA stock and analyze it. This is QVital. It is also based on MetaStock Zenith. Here, to analyze the fundamentals of a stock, we can enter the root stock. Let's say we enter NKE, that is Nike, and we can get the peer stocks of Nike by choosing the peer selection criteria. We could select industry, sector and country. Let us keep it to the industry. Click this button to retrieve the peers. It has retrieved multiple stocks, and click the calculator button to get the fundamental data and calculate the scorecard. There are multiple tabs. I will not go through all the tabs. Usually our traders will look at the scorecard first, and only if required drill down to the other tabs. Now here at the top is our root stock, that is Nike. It's a well-known stock, and if we ask people about several of these companies, say Nike and Skechers for example, most people without a tool like QVital would think that Nike is fundamentally stronger. Let us see what the data says. We have the growth parameters here in these 4 columns, which shows the EPS and revenue growth over 5-year and 3-year long-term and medium-term period. All we need to do is look at the color coding to see which stock is stronger. Remember, green color is good and red color means weak. We can instantly see that Nike has good growth, but Skechers has better growth. Over 5-year period, Skechers EPS growth is not there. However, for all the other 3 growth columns, it is doing better than Nike. So overall, we have to conclude based on objective data that Skechers as of now has better growth than Nike. What about valuation? For that, we could look at the relative value and internal value columns. Relative value looks at different valuation parameters, EV, EBITDA, PE, etc., compares the stocks with other stocks in the industry and assigns a score. These scores are colored in magenta or blue, not green or red as was in case of the growth parameters. These magenta blue parameters can range from 1 to 100, 1 being the poorest and 100 being the strongest. However, as is common in Q systems, we don't need to really look at the numbers, we can just look at the color. And when we do that, we see that for relative value score, Nike is magenta, which instantly tells us that it is already overvalued, or in other words, the growth is already priced into the stock. Whereas for Skechers, we see that relative value is still blue. It has also a high score, but again, we just need to look at the color. showing that Skechers is still at an optimal valuation and it has high growth. So fundamentally, if we look at both the growth columns and if we look at the valuation columns and the growth columns, we see that Skechers is better or stronger than Nike. The other column for valuation was internal value score. Here both Nike and Skechers are colored yellow, so they are in the middle range. So we can say that as far as internal valuation is concerned, which is calculated based on dividend, earnings projection, etc., they are about equally valuable. Now there is another important column for traders, that is the short squeeze score. Again, this is colored in blue, magenta, yellow, so we know that it is in the range of 1 to 100. We can see that Skechers has a high short squeeze score, meaning that it has a higher probability of a short squeeze. That is, it has high short interest, and if the stock starts to go up, short covering may further fuel the rally. Then in conclusion, when we combine the relative value, internal value to valuation scores, the 4 growth scores and short squeeze, all just looking at the color coding, we have to objectively decide that Skechers is fundamentally stronger. So now, if we were seeing that the shoe industry, all these stocks belong to shoe industry, footwear industry you can say. If the footwear industry is strong now, then we would prefer to look for long trade in Skechers than in Nike. In fact, a single glance at this table shows us that Skechers is the strongest of all the stocks in this list. And if we have a long opportunity on technical charts for Skechers, then we will have forces from all the levels starting from broad market. If industry is bullish, then industry fundamental is already strong, and we need to look at the technical to make sure that technicals are also strong. We will prefer that than taking a long position in Nike or another footwear company. Let's look at technicals or price move. Finally, you only make money buying a stock if that stock goes up. Therefore, it is of high importance to align your trade with the actual price moves of the stock, as seen on charts. You can do this easily, unambiguously, and using color code, again, in Q Global technical charts, or in short Q charts. I will not go through detail of Q charts in this session. You may visit the same education menu and go through very detailed books and videos from the education center to learn more about that. For today, I will only mention that Q system categorizes stock moves in 4 distinct scenarios. Let me go to the website and show that. If we go to education and swing trading, then we'll see there are 4 trade setups. What Superior Profit has done, it has identified 4 distinct stock moves, or you can say market moves: trending, sideways, reversing, and exhausting. And for each of those stock moves, Superior Profit has come up with only one Q trade setup. Go with flow for trending market, headwind for trend reversing market, box for sideways market, and bounce for exhausting market. And for each of these setups, we have established unambiguous checklists that you may use to identify a buy or short opportunity at the right edge of the chart. Again, using color codes. So we can click any of them. Let's say the box setup, and we can scroll down. We will see a checklist that is to be validated on daily chart. One column is for box long trades, that is sideways market long trade. Another is for box short trade. And just like there is a checklist for daily chart, we also have a checklist on weekly chart. Thereby, we are aligning multiple forces from the daily chart and also some forces from the weekly chart in favor of the trade. So we are aligning more and more forces with the trend. This is how a box trade setup would look like. You can see none of the indicators have any name. It is only using color coding, and every indicator can be interpreted in only in one possible way. So these dots, for example, it is either red, that is bearish, or green, that is bullish. There is no other possibility. Similarly, this dotted line that is zigzagging down, this is either down, meaning the stock is underperforming the market, or up, as in this period, meaning it is outperforming the market. There is no ambiguity about it. The unambiguity is also removed by the fact that there is no need for any parameter to be set, and there is even no threshold to be compared for the indicators. Whenever there is any parameter or threshold, in our experience, different traders tend to set them to different values, sometimes somewhat arbitrarily, to feed their bias about a stock into their charts. That doesn't work well for unambiguity. So Q system got rid of that, and all the indicators now can be interpreted in only one possible way, and therefore the checklist, which comprises of multiple indicators from the Q chart templates, the checklist as a whole can also be interpreted in only one possible way. So far we looked at Nike, which was a stock from USA market, and we used it to look at fundamental analysis. Let us now see how all these concepts, that is forces from all the levels, can be applied together for a stock in global market. Let's say Australia. This will illustrate that Q systems can be used not only in the USA market, but can be used effectively in other global markets as well, including Australia, Singapore, Hong Kong, London, Japan, India, China, etc. We will look at an actual trade idea that was identified using Q system analysis and shared in traders community. You can view the community using the community menu. However, I have already searched for that post. This was a post submitted in traders community on July 5th this year, 2017. It was an optimally priced and high dividend paying Australia media company that was about to break out from base. When posting this, I had analyzed the stock using all the Q systems. Of course, in July period, the market was bullish, so I was going to look for only long trades. When I looked at Q Edge Industry Analyst, I saw that the media companies, both for media agency and media industry, they were weak in the previous months, shown by the magenta color, but in the recent period, that is 10-day period, and more importantly for us, 5-day period, it was turning stronger. That is, color was changing to cyan. So if I could find a stock in the media companies that was bullish, then I would be able to align the broad market force, the industry force, as well as the stocks force in favor of my trade. So I drilled down into some of the media companies in Australia and looked up their fundamental. This is the snapshot of Q Vital Fundamental Analyst of the stock SWM, that is 7 West Media in Australia, and a number of its peers. Remember the color coding? Just by looking at the color coding, instantly we could see that SWM, our root stock, had the best possible relative score of 100. It had very good earning quality as well, shown in blue color. As I mentioned earlier, it is uncommon for a stock to have good valuation and high growth at the same time. That is true for this stock also. It doesn't have growth, however, at a lower price at that time, the stock had optimal valuation relative to its performance. Also, if we look at the dividend yield column, we could see that it had one of the best score for dividend. The actual dividend percentage could be looked up from the fundamental info tab, but I had already mentioned in the snapshot that SWM at that time was paying a dividend of 10.7%, which is pretty high, and it could be bought as a dividend play as well. So far we could align the broad market, the industry strength, as well as fundamental strength in favor of the trade. The last factor that we could align was the technical, and for that I used the Q weekly backdrop template. And let me read this chart for you. I could see that on the left hand side, SWM 7 West, a media company, dropped a lot. Then two green diamonds appeared. These are the headwind signals which may also be used for taking reversal trades. They indicate that a reversal may be near, which it could do successfully in this chart. After the bullish headwinds appeared, the stock could not go down. Instead, it went up significantly for taking profitable trades in the long direction. When it reached the top, it displayed two bearish headwind signals. Price couldn't go up anymore, rather it fell down. Where did it fall down? It fell down to the same low. We can see it was also marked by watermark low levels, the dotted red line. The watermark low that was created by the bullish headwinds earlier. So it was very possible that some buying was still left when price came to this watermark level, and indeed price did not fall below this level for several weeks. Finally, we make trading decisions at the right edge, And when I shared this trade idea, I saw that for 3 successive weeks, the weekly candle color, we say backdrop candle color, was cyan. Cyan is bullish. In all our systems, cyan, green, blue are bullish. Red, magenta, these are bearish colors. So we also had a bullish arrow that is called a bull release signal. After that, 3 successive weeks of backdrop candle color bullish, and at the right edge it seemed like it was breaking out of the memory resistance line. 2 of them actually. These memory resistance lines are very smart automatically drawn trend lines that may come from few days or few weeks back, or like in the case of the second line, it may even come from few years back. They work pretty well as resistance, and when a stock breaks out of that, that may point to a possible significant up move. So when I looked at the broad market, it was bullish. When I looked at the industry's strength, it was weak for a long time, turning strong. When I looked at the stock's fundamental, it was clearly one of the strongest with the best possible relative value. And when I look at the technical charts, I saw that it has high probability of breaking out. So I could align all the market forces in favor of the trade when I posted the trade idea. How did it work out? I followed up with a chart on July 14th. The trade was initiated on 5th July. And on 14th July, on the right hand side, we are looking at the same stock now using daily chart. I saw that price has come to this watermark resistance level and it was creating a triple top. Already more than risk distance was covered, and I decided to book partial profit as is superior profit guideline and put trailing stop on the remaining position. How do I put trailing stop? Again, we can just use the Q hop off template, which has the Q protection signal, to establish the trailing stop. Eventually, SWM went up further and then declined, and the remaining position was topped out at the trailing stop, giving considerable profit in the whole trade. This was a live case where Q systems was used to align forces from all the levels in favor of the trade. There are similar trades in traders community and also in our weekly market roundup, that is a live analysis of the market and stocks every week, for which you may register by going to the live class and clicking on this register button. You will see more examples using live system of how you can do analysis across these different levels and align maximum forces behind your trade. As you may clearly see, the more forces you align with your trade, higher is the probability of success. However, this alignment is not always present. Every time you come across a stock, all the forces may not be aligned. However, it pays better if you are patient and wait for the alignment of all or at least most of the factors. How to identify such highest probability trades? It can be done in top-down approach or bottom-up approach or a mixture of both using Q systems. In top-down approach, we start with broad market perspective, which is bullish now. As we saw from the commentary, it doesn't change from day to day. We look at it only at the end of each week. So it is bullish now. And then we can use Q edge sector industry ranking to identify the industry's direction. For simplicity, let us just look at industry analyst today. Let me go to the live system. If I sort it over 5-day period to get the strongest stocks, then I can see that biotechnology is one which is strong for some time. Over 5-day, its rank was 4, and in fact today, that's the live data, its rank has improved to the best possible rank. So we could look for possible long trade in biotechnology. How do I get some of the stocks? I can put my cursor anywhere on the row and click on this get stocks or get components button, or use the hotkey Ctrl+Shift+S. When I click that, then if the system is connected with internet, it should bring the biotech stocks. Let me see. Okay, automatic. Let me see gold stocks. Okay. What about biotech? Okay. We have a number of biotech stocks that are retrieved. We could simply copy them, go to QVital, and now instead of using the root stock, I can paste the symbols from the industry drill down, click on the calculator to calculate their scorecard, go to scorecard column, and instantly we can see Gilead, G-I-L-D, a well-known company. Just by color coding we can instantly see, and also from the score if you want to, has the best possible relative value score. Gilead has good growth as well. So this is a top-down approach where we observed market is bullish. We saw from industry analyst that biotech is strong. We used industry analyst to drill down to some of the stocks, calculate the fundamental scorecard using QVital fundamentals, and looked at the scorecard. Immediately Gilead popped up as one of the best, fundamentally strongest stock. What about Amgen? We see its growth is not good. We can just look at the color coding. Growth is not optimal, though the valuation is good. So this is the top-down approach. The last step would be to check the stocks using Q charts to see if there is a potential long opportunity. In a bottom-up approach, which I will not demonstrate now, you can use MetaStock's Explorer to look for long trades. These are the long trade setups: bounce, box, go with flow, and headwind on a stock list of your choice. Let's say S&P 500 or any list that you have for USA or other market. Identify potential trades, and if you find a good trade on the technical charts, you can just look up the stock's fundamental using QVital, and then as a final step, make sure using QEdge that the stock's industry is strong. So sometimes what I do is I run the top-down approach on a weekly basis, create a list of possible stocks that I will trade the next week, and review the stocks using QSonar and Q charts. That is a bottom-up approach on a daily basis to pinpoint the exact buy short signal. In summary, you cannot control the market. However, you can take only the highest probability trades where forces from all the market levels, that is broad market, sector, industry, fundamentals of stock as well as technicals, are aligned with your trade. Risk only small amount in each trade and let the statistical edge work out in your favor over a number of trades. Using Q systems, you can do that easily and without ambiguity using visual analysis, and you can do that using simple workflow in a time-efficient manner. I will just show one more way of analyzing stocks using Q Vital as the starting point before I end. So this is same Q Vital. What I have done is I have simply input all the 500 stocks of S&P 500 in the manual list. I have already calculated the fundamental scorecard. So now I can go to the scorecard, and if I am looking for long position for stocks with optimal valuation, we may simply filter by color. Filter by color. And instantly we have all the stocks from S&P 500 which are optimally valued. Suppose we are looking for long-term investment also. In that case, I prefer to look at stocks which has strong earning quality. So again, I can simply filter by color, again blue. So now I have a list of stocks which has strong relative value, strong earnings quality. Let me also look for stocks which has strong internal value. This is the final list of stocks. And then I can look at the growth columns to see which one of them has strong growth as well relative to its peers. And immediately ABC comes out as a possible trade. Which industry does it belong to? This is row number 8. We can go to basic information. Let's go to row number 8. It belongs to drug retailers. Let's look at the industry strength for drug retailers. We'll go to industry analyst, industry work area. We can just filter by drug, and I see that drug retailers were weak for a long time, turning cyan now. So this may be a chance to catch the bottom of some of the stocks in drug retailers. So market is bullish. This industry is just turning around from weak to strong. The stock ABC is fundamentally very strong. Last step would be to look at the stock. So I will spend 2 more minutes to look at the stock and see how it is. We'll use the 2 charts, weekly and daily, that helps us instantly decide if there is a trade or not. This is based on today's data. I'm using MetaStock real time, so it is going to the MetaStock Zenith server and retrieving the data. Okay. Maybe I have smaller bandwidth. Let me just try the daily chart. Anyway, you may look at this stock ABC. It has very good fundamentals, earnings quality, and its industry seems to be just turning around. So if you have a buy signal using Q standard setup on the chart, you may have a very low risk entry opportunity. That is all that I plan to share in this session. Again, thank you once again for joining me today. I look forward to seeing you in our next webinar as well as in the weekly market roundups. I'll be happy to answer any question you may have. You may also write to me in this email ID. And if there is no question, I will pass control back to Hunter.
Wonderful. Thank you so much, Sagar, for another great presentation covering the ins and outs of a couple of different ways to do analysis, both top-down and bottom-up analysis through your systems. And you know, for the attendees here, you know, this is one thing that I always like to talk about at the end of Sagar's webinars is the fact that there is full support from Sagar basically at all times through his website. So www.superiorprofit.co. He has ebooks, videos, tutorials. He has a lot of this market information for free on the site, and a wonderful community of traders that powers this site. Now, a lot of the tools that you've seen this evening, some of them through the Q Global add-on through MetaStock. That actually includes 19 indicators, 19 explorations, 9 templates, and 7 expert advisors. So quite an extensive system offered for the technical analysis portion of this webinar that you saw. What we really want to do is give you the ability to go through and actually try this system out, not just the add-on, but as well as some of Sagar's other tools that you saw this evening. So we will be offering a trial of Superior Profit Q Global, as well as so basically, if you pay for 1 month of Q Global, you get 2 additional months for free. And Sagar was gracious enough to provide Q Vital, which he spent a lot of time in this evening, showing you kind of the ins and outs as far as fundamental analysis and overall market analysis. He would throw that in for free as well. So this is definitely a unique opportunity to be able to try you know, this system and a few of the things that he spoke about tonight, as well as, you know, we're always doing webinars with him, and he has all of them on his website, extensive training on his website. So this is not a situation where this webinar is the only tool that you have to be able to learn this system. You can learn one-on-one from Sagar. Couple of questions here. Can MetaStock scan over industries and sectors? Yes, it definitely can. And the monthly subscription, as shown, does come with the majority of the tools that you saw. The trial would come with all the tools that you saw this evening. A couple of ways that you can get this: contact Sagar directly at superiorprofit.co, or you can get this trial through metastock.com/superiorprofit A 3-for-1, and that should be on your screen right now. We do have individuals available in chat, but I encourage you to either go through this link or just contact Sagar directly if you do have any questions. So take advantage of this offer. Once again, I'd like to thank Mr. Sagar Nandi for presenting this evening. I'd like to thank all of you for attending. Please let us know if you have any questions. I'd be happy to answer those for you. And as always, happy trading.